Happy Wednesday, ladies and gentlemen, all in crypto here, and welcome back, guys, for another jam-packed daily market update. A hell of a lot going on. We're going to start things off by addressing yesterday's price action. The cryptocurrency market bumped down a little bit. We're going to be looking at that and putting it in the context of the broader direction. It always amazes me just how quickly a dark cloud arises at any point there is a pullback in the cryptocurrency markets, but pullbacks are part of any healthy market. In fact, you want to see pullbacks. This is a short-term, short time frame pullback in a grander bull market. And not just a bull market for Bitcoin, but a bull market for assets more broadly. Gold hit $4,000. And I've been speaking to you guys a little bit here and there. I will do a specific video on my kind of idea of a financial rapture taking place, where those that own assets get to go to heaven, and those that don't, that are in fiat kingdom, ultimately get to endure the vials that get poured out of them. I think there's 7 vials in the book of Revelation. Now, I'm not suggesting that's going to happen to you. I'm suggesting that ultimately you're going to be stuck in fiatdom, which is going to be serfdom, essentially. And gold is very much signaling this, and a broader shift taking place across the globe to safety. We've got news about France and how their political chaos has thrown its soaring debt and deficit into the spotlight. It should have been in the spotlight for a long time. There's a issue with the underlying monetary system. I believe crypto, and one reason I think crypto is going to be so successful is because it is going to essentially rejuvenate that financial system. I don't know exactly how. I have some ideas, but it's going to turn, or it's here essentially to be the new system. And I think we are really seeing the old system, the debt-based system that we've been on really since the Nixon shock. And it really took a turn in 2008 when Bitcoin was given to us, really starting to come to an end in regards to how things are done. And it doesn't have to come to an end in the sense that we stop issuing debt and the debt markets don't exist. I don't think that's going to be the case, but I think they're going to morph. And then we've got huge news out of the S&P. They are launching the Digital Market 50 Index, combining 15 major cryptocurrencies and 35 blockchain-related stocks to offer a diversified exposure to the digital asset market. Now, the S&P 500, which tracks the largest 500 stocks in the United States, is the most heavily invested in stock market index in the world. So the fact that these guys are eyeing up crypto now is interesting. Also, it's very interesting that we do have Canary that have just filed their S1 amendment for Litecoin and Hbar, spot ETFs. This is very much the goal line that we're at. And, you know, ignore price action, which is where we're going to start, like what we saw yesterday. This is yesterday's price action that took place at around about 2 p.m. UK time. And, of course, the altcoins sold off to more of a degree. But I just want to reassure people that in the broader context of things, which we try and keep you focused on a daily basis, this is what your pullback looked like. Exceptionally irrelevant. Despite that, $641 million got liquidated from you guys. Now, I'm not talking about you guys really at the end of the camera or the other end of the camera. I'm talking about people partaking in the crypto markets, trying to chase a fast buck. Stop leverage trading crypto, please. If you take anything from this, let it be that if you're leverage trading crypto right now. You'll notice in our description, the only link that we have is to my group. It's the only thing that I promote. I don't promote, despite the lucrative nature of it, any kind of referral links to exchanges for people to leverage trade, unlike a lot of other people in the cryptocurrency space. And there's a reason for it, because I think it's akin to not, essentially telling somebody to go around the corner when there's someone waiting for them with a baseball bat. I would feel very guilty about that. And I think actually, I know a lot of these people that actually promote that. And let me tell you, they ain't what they say they are. Anyway, enough of that. So it's important always to focus on the broader trajectory of things. It's what we try and impress on everybody, because it really just is a good time. And the crypto market cap, excluding Bitcoin, is really just at that kind of all-time high resistance. It will go through it, guys. And you will march to, I believe, $6.3 trillion, yeah. Total market cap excluding Bitcoin and Ethereum in a similar point. And others, I think, is going to outperform both the total 3 and total 2, meaning that we are in an alt season in line with what we're expecting for Bitcoin dominance. Nothing changes here, guys, in regards to what we're expecting. Despite a little bit of downside, which just dampen everybody's spirits, which I think is understandable. Let's talk about gold. Now, gold, we gave you guys a lot of targets for gold back in 2022. We said gold's on the cusp of breaking out, similarly to what we're looking at for the total market caps, okay? And since then, it's very much performed to each and every one of them, whether that's the bull flag target, whether that's the head and shoulders target within the bull flag, or whether that's the cup and handle target that it's smashed. Remember, we think Bitcoin has a cup and handle target that takes it to 306,000. You know, the total 2 to 6.3, so on and so forth. And it's now at 4K. And the context of gold doing this is ominous in the sense that what this is a flight to a store of value outside of the kind of global store of value, as it were, in regards to the debt markets, or certainly what central banks have held to enable global trade. So what you have with this move is central banks dumping treasuries, the dollar-based system, the fiat system really more broadly, and adopting something outside of that being gold. Now that to me signals something very ominous in regards to the debt markets, which not only are at this colossal size, people are now starting to go, okay, well, what's the path forwards? When we locked everyone down, that fundamentally changed the debt markets, I think. And since then, we've seen gold act in the manner that it has. So all assets sold off during the lockdown period, and then gold just kept running. It didn't have any kind of a slowdown. And the fact it's here, I think, is more symbiotic or in line with what we're talking about in regards to this financial rapture that's really has been happening. But what's happening is fiat continues to devalue and assets are going, everything is Bitcoin. And what I mean by that is gold is Bitcoin, in the sense that it's really what Bitcoin is. It's a store of value outside the fiat systems. The S&P 500 is Bitcoin. Stocks are Bitcoin. Other cryptos are bit, they've all got this. Assets generally have now got this Bitcoin property, and that is to be a apparatus to escape the fiat systems. And gold is really signaling that. We're expecting major moves for silver, obviously major moves for the crypto space, and against the money supply. I like this chart because I think it's insightful. We're actually expecting the stock market to break out from where it's been since 2008. And that, to me, ultimately signals a real devaluing of money in asset terms, because what this accounts for is money creation. And if the S&P is about to break out against it, and gold is breaking out against it as well, and has been for a while, the Nasdaq already has, then this is not only outperforming the amount of money they're printing, but the money and the value of it itself. And I think that's linked to what we're seeing with gold and what we're expecting for the Dixie in regards to it breaking out of this channel, or down from this channel that it's been in since crypto was given to us in 2008 when the system properly imploded. There's a lot going on. We like to throw this into our daily market updates because ultimately we think it's important. If you own fiat, you're going to be directly affected by this. If you get paid in fiat, if your businesses use fiat, you're going to be directly affected by this. And my businesses, for example, we own crypto and other assets that we typically hold our balance, obviously within the legal parameters of what you can do. There are restrictions depending on where you are. But in regards to what we can do with our balance sheet, we will allocate what we can, the limit essentially to what we can in regards to crypto and assets, because we don't want cash, because we think there's a lot of devaluing of it coming. And this is that final rapture or the financial rapture that I'm talking about. People that own assets get to go to heaven. People that don't get to be left on earth and endure the vials. And this also came up on CNBC. France's political chaos throws its soaring debt and deficit into the spotlight. Very interesting, everything that's going on. We're seeing some major move in the Japanese yields, so on and so forth. Let's move on to a little bit more positive news, because we dealt with the recent pullback, which is really a nothing burger and should be ignored. People make money in markets through basically sitting on their hands and getting a couple of calls right. When to get in, when to get out. That's what we want to focus on. You don't want to be doing that on every little... You don't want to sort of... If you think you can do that before every time the market pulls back and every time it's about to rally, on those little journeys on the way up, then by all means. I don't think I can. I know my limitations, so on and so forth. Anyway, this is from the S&P 500. Sorry, not the S&P 500, the S&P, it stands as a pause. The S&P 500 is the largest or the most heavily invested in index in the world. The S&P have now, or are launching, the Digital Market 50 Index, combining 15 major cryptocurrencies and 35 blockchain-related stocks to offer diversified exposure to the digital asset market. Now, I need to go entirely through this and see what stocks have been a part, and it's something I will do. Single coin indexes, they have, and now we're looking for a kind of basket, as it were. This is very exciting, and this is kind of what they have to say about it. The S&P Global is excited to announce plans to expand its S&P Dow Jones Indices crypto index offering with the launch of the S&P Digital Market 50 Index. Denari, a leading provider of tokenized US public securities, has licensed the new index to create a token tracking the benchmark. The index is designed to track a wide range of companies and digital assets connected to the crypto ecosystem, combining cryptocurrencies and public traded companies, linked equities into one index. Cryptocurrencies and the broader digital asset industry have moved from the margins into the more established role in global markets. Our expanded index suite offers consistent, rule-based tools to evaluate and gain exposure to this segment. Globally, market participants are beginning to treat digital assets as part of their investment toolkit, whether for diversification, growth, or innovation strategies. Extremely interesting. And why are they doing this now? Well, this is from Eric Balanchunas. Interesting. Canary just filed an S1 amendment for Litecoin and Hbar spot ETFs, and they include the fees of 95 basis points, which is actually quite high. That's each. And the ticker is LTCC and HBR. Great ticker. Which is typically the last thing updated before go time. With shutdowns, though, who knows? But these docs look pretty much finalized. This is the update, and he gives an extract. He says, my take on the 95 basis points fee. It's pricey versus spot Bitcoin, but pretty normal to see higher fees for areas that are new to being ETF'd and increasingly niche. That said, if these flows, other issuers will no doubt come and Terradome the something with cheaper products. Yeah, absolutely. They've set the benchmark very high there. Maybe they want to be the first. Also, James reporting on this feels like Litecoin and Hbar ETFs are at the goal line here. So there's a lot going on fundamentally with the cryptocurrency space. The embrace of it, the S&P talking about it, you know. So many, every day we get hit with new people, major people trying to leverage this technology. You've got the adoption of this technology. You've also got the asset side of things. Both are coming together nicely. And also technically, we're expecting major breaks for the total market caps, continuation for Bitcoin and alt season. The stars truly are aligned, guys. Please don't get fatigued or frustrated with day-to-day price action. It's just part and parcel. We're in the most volatile space that there is right now. We take that as it is. That's really it from me, ladies and gentlemen. I'll see you all in this evening's video and, of course, in tomorrow's daily market update. Thanks for watching, guys. See you soon.